These days, the conventional wisdom is that you can take someone with average intelligence and buy them a QuickBooks license, then get them to watch a couple of YouTube videos and do the bookkeeping for the company. Certainly, the folks at QuickBooks, or XERO, would like you to believe that anyone can do their own bookkeeping with the right software. The story goes that you just link the company's bank and credit card accounts to your accounting software of choice and process the transactions through something like an artificial intelligence engine. You then create rules for categorizing the transactions yourself. It sounds simple, right?
This aligns well with another myth that most college graduates learn from their introductory accounting instructors at university. The mantra usually goes something like this: owner-managers of small businesses need timely and accurate financial reporting so they can use the information to manage their businesses. This perspective wouldn't be too far off if you accepted Statistics Canada's definition of a small business as a company with fewer than 100 employees and focused on the top 2% of businesses with 50 or more employees, but fully 98% of these businesses have fewer than 50 employees, and more than 90% have fewer than 10. About 21% have fewer than 4. What about these very small businesses? The reality is that most of our smallest businesses, i.e. the 91.8% that have fewer than 10 employees, outsource the accounting function. They do this because tax compliance is important and too difficult to leave to part-timers with an introductory accounting course and a few YouTube videos under their belt. In 2008, Statistics Canada's survey of regulatory compliance costs found that about 62% of businesses with 4 or fewer employees outsourced their income tax filing to an external service provider. For businesses with 20 or more, the percentage increased to 75%. Companies that outsource the accounting function generally don't ever have timely and accurate accounting information at any time in the year. The public accountants that do most of the accounting for our small businesses are too busy and too expensive to deliver it in a timely fashion. What's more, the owner-managers of these very small businesses would be unlikely to understand it well enough to help with their day-to-day management, even if they had it in a timely manner. The best managers tend to be transaction-focused and find rules of thumb to serve as a substitute for conventional financial statements. If you are like more than 90% of Canada's businesses with fewer than 10 employees, think carefully before getting someone on your staff to do the accounting in QuickBooks. Certainly, you'll have to do the billing and keep your receipts religiously in-house, but as a professional accountant with over 40 years of experience as a bookkeeper, tax auditor, independent public accountant, and senior manager with 2 of Canada's largest accounting firms, I can say unequivocally that it's not a great way to save on year-end accounting fees. In my experience, you'll pay much more for your year-end if the bookkeeping is done poorly in-house. Nobody that I know likes doing the books, particularly if it has nothing to do with your business's core revenue-generating activity. I know that I hate to do my own bookkeeping. In spite of this, I do use QuickBooks, but I have a very good reason for this. Like all of the popular software accounting packages used in Canada, it makes billing convenient. This is true both for me and my clients. When I issue an invoice to a client, they can conveniently pay online using their bank or a credit card. This convenience translates to better cash flow for me. That convenience is almost always the main justification for using online accounting software. In fact, I only use online accounting software for billing and collection. I don't even use the software's financial reporting capabilities. Instead, I use homemade working paper software to compile transactional data and for tax basis financial reporting. This homemade software is the same thing I use for my clients, and it's far more efficient than any of the commercial packages I've worked with. When clients provide me with data from an online accounting system, I tend to use it kind of like a can opener. By that I mean that I use their accounting software to pull the detailed data out. Then, I plug it into my working paper system. Like most of my clients, for me, reviewed or audited financial statements are way too expensive and have no value when it comes to borrowing. For that, I rely on a good credit history and, if necessary, the pledging of my personal real estate. Most of all, I use credit cards for short-term financing, and then pay them off every month religiously.